This is Opening Bid on Yahoo Finance. I'm Julie Hyman in for Brian Sazi. There has been a recent trend of some management turnover that we have been keeping an eye on. And one of the interesting pieces of that trend is that in some cases you have outsiders with management backgrounds who are being replaced by insiders or more industry folk to take over for those outsider CEOs. In addition to that, we're focusing on a multitude of management changes and executive changes at the AI giant OpenAI. To help us talk about all of that is probably the perfect person. Gautam Mukunda is with us. He is a lecturer of management practice at the Yale School of Management and the author of Picking Presidents, among other books. And he studies management and is steeped in management. So Gautam, I'm so glad that you're with us today.
Kate, it's a pleasure to be with you. I'm looking forward to it.
So I'd like to start with the situation at OpenAI because that has been unfolding over the past couple of weeks. Mira Murati, who is the chief technology officer, stepped down, as well as a couple of other executives. This at a time that we're also learning OpenAI is going to be converting into a for-profit entity. Not only is going to be, but has to convert in order to not change the sort of terms of its funding over the next couple of years. So as someone who watches management, what does it say to you that this is happening? And not only that this is happening, but it's happening at this particular juncture.
Yeah, I'd say this is deeply concerning, and it does link back to the larger theme that you talked about earlier. The people who are leaving are OpenAI's technical people, the scientific lead and engineering leaders who have sort of had that vision and crafted the technology and have pushed it forward. Sam Altman, whatever else you can say about him, and he has obviously a large number of sort of extraordinary skills, he's not a technologist. Like he is not the person who is doing that. That is not his core skill set. And so OpenAI is losing those people and the people whose vision was to make it, right, the open part of the OpenAI. If I were someone, if I were an investor, but more broadly, just someone who thinks that this technology really is extraordinarily important, this is a deeply worrying trend, right? What you're seeing is one of the, if not the leading companies in this space, in this technology, that a huge number of people seem to think is going to change the world. A company that was designed and created and devoted to doing things for the public good, not just to maximize the profits for its individual shareholders and executives, is transitioning from that model into a traditional for-profit company and pushing out all of the people who seem to have been most focused on the public good part of that story. Right? Their safety committee seems to have been largely disbanded. The people who sort of were most publicly tied to really worrying about the downsides of AI seem to have left. This is not, in any sense, a story that I find encouraging or a good sign for the future of either OpenAI or for that industry's effects on the rest of us.
Well, and to your point about Sam Altman, maybe he isn't the technologist, but he is sort of the marketer, the inspirer, if you will. So much so that when, he briefly left the company, there was sort of an internal revolt. So it does seem as though there is a loyalty to him among some of the staff. So when you look at his leadership, is there some confidence that he will be able to get other people there? I mean, already they have hired in the run-up to this some other folks who do have that technology expertise.
So I don't doubt that he will be able to do that. If there's one thing I've never met Sam, right? But if you look at the outline of his career from the outside, if there's one thing that you can say about it very consistently, it's that he seems to be really, really good at maneuvering inside and maneuvering companies and sort of the corporate at Yale, I teach a class called Power and Influence, right? It's about understanding organizations as political entities and the struggle for power within organizations and what it means. And every year on the first day of class, I tell the students that the real name of the class is Defense Against the Dark Arts, because people don't necessarily like these tools, but you need to understand them because they are incredibly powerful. Sam Altman looks like a master of the dark arts, right? And that is a commendable skill set for a CEO. It's not the only one, but it's an important one. I don't doubt that he's going to be able to recruit these people. I'm more worried twofold is what is he going to do with them? Because we have seen over and over again companies that are willing to sacrifice both long-term gains for short-term benefits and sacrifice the interests of lots of other people and of society as a whole for short-term profits. And as the power of that technology gets larger and larger, the downsides and the risks of them being willing to make that sacrifice get worse for the rest of us, right? I have a lot of respect for Sam Altman, but I did not vote for him to decide the future of this technology, and I don't think anyone else did either. So I'm not sure we should be comfortable with the idea that he or he alone is making choices, or any number, or like he and 5 other people in Silicon Valley are making choices that might decide the fate of, according to them, right? Like this, I just want to be very clear on this. This is not me saying that AI will decide the future of humanity. I don't think it will. I think it'll have a big impact. But they are telling us that AI, right? There are 2 stories they're telling us. I could summarize them, but I'm not parodying them very much. AI will decide the future of humanity, and no one but them should have any voice in what AI does. It seems to me that these 2 stories are fundamentally incompatible, and we should be thinking a lot about that fact.
Is there any entity out there? I mean, we just saw Gavin Newsom of California recently saying he's not going to sign the AI legislation that had been on the table. He's apparently working on other legislation. Is there any curb on what you're describing? Any potential curb on what you're describing, whether it be regulatory or sort of within the industry?
So look, first, there are technological and market-based curbs on what we're describing. Like OpenAI has done extraordinary things. I pay my $20 a month membership. I've never regretted doing it for a minute. But they do seem to be losing $4 to $5 billion a year. However optimistic investors are about their future, there is, at some point, there is a limit to that story, right? Like there is an outer side, there is a margin there. The second is that the OpenAI themselves, I think, have said, and other AI, that it is difficult now to build measures that accurately assess the capabilities of their own tools. So they are very optimistic that GPT-5 will be a huge step forward over GPT-4, but also saying that objective measures of that huge step forward capability are hard to generate. Right. So there are financial limits, and just how long are people going to be willing to put this amount of capital in without seeing like a very clear business plan for what the return will be. There are technological limits, and that the technology may just end up not being as powerful as fast as we think it might be. But more broadly, I think you've identified exactly the issue, right? Managing these sorts of externalities, managing these sorts of concerns, is quintessentially the job of the government, right? It's one of the reasons we invented governments. And so first, we have to empower it to do that. And that doesn't just mean give it the legislative authority. It means getting people there who have the skills, right? You want top-notch AI people advising or even working for the government. If this really is the most important thing in the world, which again, AI technologists tell us all the time, then some of them should be saying, well, look, I'm willing to volunteer to work at the White House and work with Capitol Hill to do that, right? Like, that's what you do when you're working with the most important things in the world. In the 1940s, the physicists, right, who were inventing the atomic bomb when they worked for the government, that whole project began because Albert Einstein wrote a letter to Franklin Roosevelt saying, this is really important and you need to pay attention to it.
Right. Let's go back to the leadership piece here, because as you mentioned, OpenAI reportedly is losing a lot of money. Most people don't have access to invest in OpenAI, right? There's talk of that they're going to have a funding round. But if you were, and in general, you as a management expert, how heavily, and maybe you're biased in this regard, how heavily do you weight the management? How do you judge the management when you're deciding whether or not to invest in a company?
So twofold. One is I weight the management almost, especially for early, and OpenAI is not early in any meaningful sense given how large it is, but it has the level of uncertainty that we usually associate with early stage companies because we still don't really know what this technology is going to go, where it's going, or what it's going to do. I weight the management overwhelming, right? So I say it's twofold. One is
that doesn't, I have to admit, that doesn't surprise me, Gautam.
Shock you, right? Like, what are the odds that management? Yeah, but let me start with this. I started out as a technology person, right? Reading lots of science fiction novels and thinking I was going to be a physicist when I grew up. The first thing I weight is a scale of opportunity, right? Like the pattern matching sort of style of investing of what can we squeeze out a little bit here and a little bit there. I am both intellectually biased against it, and early stage companies, I just don't think it works. If you're not trying to do something really, really big, I mean, like there are lots of ways to make money. I always think that's not worth my time to think about. And OpenAI is playing at the, at the largest scale in terms of the scale of the impact that it's trying to do. I would start with that filter. But the second is management. And to tie back to how you started this conversation, right? We're seeing a lot of companies that are learning, very much to their regret, that management that is focused on financial returns as opposed to on great products, on doing great things, right, ends up delivering meat. And that is sort of so when I look at the management team for a company like this, I very much I have a huge negative bias toward managers whose clear passion is making money. Like if their clear passion is making great products, making a great thing, like changing the world, not in the vague, like, oh, I want to change the world thing that everybody in Silicon Valley says. I remember going there and talking to a company that what they made was it was fitness trackers you wore on your wrist and track your steps, right? And their story was, we are going to cure American obesity. And I had one of their products. I was literally wearing it during the pitch. They said, what you guys do is make bad pedometers. Like the product and the story do not match. Like that is just not a plausible story. But some companies are trying to do really, really do have a story where they're trying to do something really important, and that is what animates them. And I'll just sort of say, like the pool of people in the world who are purely and primarily motivated by finance, by financial returns, is not that large, right? We can't often, I often tell students that we can often think of sort of compensation as a hygiene factor. You want to have enough, but past a certain point, it does not all that effective as a motivator for most people. For those people for whom it is a primary or like only motivator, like we have a word for those, it's like hedge fund managers, right? That's how we, most people don't work that way. And in particular, right, most scientists and engineers don't work that way.
Yeah, right. I think that's fair to say. Gautam, we're going to just take a quick break here, and then we are going to continue the conversation. You're listening to and watching, perhaps, Opening Bid. We are back on Opening Bid from Yahoo Finance. I'm with Gautam Mukunda. He is a lecturer of management practice at the Yale School of Management and author of management books like Picking Presidents. Gautam, we've been talking about the challenge of finding someone to run a company who wants to build something amazing, right? Rather than focusing on the financial returns exclusively. You want to have both, obviously. We've been talking about the example of OpenAI. Let's turn now to those other two examples that we had recently where we saw management change at both Nike and at StarBucks. And in both situations, again, it seems like you got someone, you exited a couple of people who were not necessarily steeped in the product and brought in people who were more steeped in the product. Is that the way to view this story? And how difficult is it then to right the ship? You can't snap your fingers and make a management change and fix everything.
No, so righting the ship is the hard part, and definitely, so we'll dive into that. But let's say, I actually will note that I think the Starbucks and the Nike stories are a little different.
Okay.
So the Nike story, the closest parallel to the Nike story is not Starbucks, it's Boeing. Right, so this is a company that has this legendary global iconic status as American as mom and apple pie around the world. You thought of Nike, you thought of Boeing, like this is it. This is a titan of American capitalism that was founded and taken to greatness by people who cared deeply about the product, right? But the line about Boeing was that Boeing was an association of engineers dedicated to making great planes who would sort of accidentally make lots of money. But that was not what the company was about. And under the stewardship is really not the right word. Under the rule of a succession of people trained largely by Jack Welch at GE, they transformed it from a company dedicated to making great planes to a company dedicated to making its quarterly numbers. That did really well in the short term, and it did really well for the CEOs who were paid hundreds of millions of dollars to, metaphorically and literally fly the plane into the ground. Mm. But it did not do well for Boeing's passengers, for Boeing's customers, for Boeing's employees, or for the United States of America, which, after all, Boeing is supposed to be trying to benefiting in some way, shape, or form. And in the long run, it did not do well for Boeing's shareholders either, who are clearly suffering from that, right? The transformation there was from caring a lot about airplanes to really not being interested in airplanes and being focused on just how does this affect my quarterly numbers. Nike had a very similar transition, right? Like the sort of big sort of thing that really raised my eyebrows about the CEO who just was just pushed out, right? Is like in 2 years after he became CEO, in a company conference call, Nike has a foam that they actually based on aerospace technologies called Performance X, they call that. And it's supposedly a key to their superiority of their shoes. I have no idea. I'm not a runner, like, but that is their marketing story. Um, and he referred to it on a conference call as Performance 10, which means that you're CEO of this company for 2 years, which is a long time. But I would say long before you became CEO, you should really care about the shoes. And I mean, you should be obsessed by the shoes.
I mean, it's
right?
all about the shoes. Wasn't that the tagline?
Like this should, you should wait. The first thing you think of in the morning and the last thing you think of when you go to bed should be, how do I make the shoes great, right? And obviously, in the case of a company like Nike, that's not just about technology. It's not like the Boeing version. Great also means what are the branding? What are the athletes associated with? What is the story I am telling about the shoes, the clothes, everything? The sort of story about like you would hear this line about Nike that other companies are clothing and Nike is a religion, right? Like there's something special about that. And if you are not part of that, you're not well suited to running this. You might be a great CEO somewhere else, but you're not well suited to running this company. That's the Nike story, and it's the same as Boeing, right? They went from a company that was obsessed by making great things to a company that was focused entirely on sort of, can we do internet marketing? Can we shift our channels? Can we improve our margins? That slashed R&D, that sort of didn't do all of the things that made Nike great. And so when their recycled products, the Panda Dunks that they brought out and had this huge hit, when of course sneaker culture turned against them, they had nothing to fall back on. They had nothing to replace it, nothing new to roll out.
So Gautam, fast forward to them bringing back in Elliott Hill. Is that, how difficult, how long does it take, if indeed he is the right person, how long does it take to bring them back to what they were? Can they ever be what they were? And again, if I'm an investor, what am I trying to solve for? What am I trying to figure out if I'm trying to decide whether to buy those shares?
It depends on how deep the damage is, right? And essentially the question for that is, what's brewing in Nike's archives that they might be able to bring out pretty soon? How many of the great designers and the great engineers that have left because they just didn't like what the company had become, and they went. So if I were an investor, I'd be thinking like, do we believe that the DNA that made Nike great was permanently damaged by this experience, or it's still there waiting to be called up? It's too soon for me to know the answer to that, right? Someone who's closer to the company might be able to. But my judgment would be that what they were before, they ceded some advantages that it's very hard to replicate, right? The market share that they had, the complete dominance of some of the most important retailers. It's hard to see how they're getting that back. But that doesn't mean that great companies are remarkably resilient, because there are cores of people there who believe in what it does, right? Like that is a very hard advantage to replicate. And as long as you don't completely destroy it, it gives you an extraordinary asset to build on. But if I were an investor, I might also be thinking a little bit more broadly about the fact that being a great investor doesn't make me a great operator. And maybe I should be a little bit more reluctant about telling company executives how to run their company, right? And so we see this over again, right? Companies that are managed by Wall Street are managed by. And the striking thing is, so my observation, you're sort of a long time with this, like the number of great CIOs who are great CEOs is like pretty tiny, right? So investors know this about their own companies, right? That they know that those are generally separable roles, because the skills that make you a great investor and the skills that make you a great operator are not the same skills. In most people, they're antithetical skills, right? Like they are actively opposed to one another.
Right.
And it is always striking to me to hear investors then go and say, like investors who are steeped in the financial sector, who presumably know more about the financial world than they do anyone else, but who are self-aware enough to say that they should not be running financial companies because that is not their skill set, telling the CEO of Boeing or Nike or Procter and Gamble, well, this is what you should do. And like, really? Um, and I think we've run this experiment often enough that we're starting that I think investors are learning now that this is not a successful.
So what does that say about activism then? Does that, I mean, it seems to me you're saying something about activism, no?
I am, and I should say that not that there's no role for activism, but that it's right. There are absolutely managers of companies who are, clearly not good at what they're doing or are clearly essentially running the company for their own benefit. And there's a real role for activist investors in that, right? But the activist investor who would have been really successful at Boeing or Nike is not the activist investor who comes in and says, "Why aren't you making your quarterly numbers?"
Right.
It's the activist investor who says, "Why aren't you making great airplanes?"
Right.
Like,
yeah.
There was a role for that investor. I'm not sure who the activist is who would do that, but that person would both fulfill an enormously valuable function and would have made, would have done quite well for themselves. They've been able to make that transition successful.
Gautam, we only have a few minutes left, and I want to briefly touch on, as pithily as we can, a recent column that you wrote where, and this refers back to what you were saying about Sam Altman being a master of the dark arts, perhaps, where you write about how some CEOs are psychopaths, but you don't, and this sounds weird, but you don't mean it in a negative way necessarily. So explain to people what you mean by that and why it can be sort of an asset for a leader.
So psychologists who research psychopathy and management have found that the rate of CEOs who have an elevated level of psychopathic traits, right? Being a psychopath is not a binary. It's not a yes or a no question. It's like, how much are you? Just a better way to think of it, right? There's a spectrum, and we're all on it somewhere. The rate of CEOs who have elevated levels of psychopathic traits is about the same, within a few percent, of prisoners. Right, so there's a line that you'll hear in the field. People in the field say that the two professions where psychopaths are most overrepresented are prisoner and CEO. Right, but when you think about this, the reason that there are people who they're fearless, they take risks, they never get rattled under pressure. My friends who are in special forces, there are more than a few of them. And you look at them and go,
right.
You took the clinical. If you took a clinical assessment, just where would you end up? And then it's sort of interesting. Those people are they match with our mental stereotype of being great leaders, and they also actually can be very successful leaders. The problem is that those traits and the bad traits usually, not always, but usually appear in the same person. And the bad traits can be extraordinarily dangerous. The model that we have adopted for too many CEOs, it's right, people who are willing to cut, right, at the blink of an eye, right? I'll just lay off 10% of my people because it'll get me a spike in the short term, right?
Yeah.
Long-term unemployment, the psychology research says that long-term unemployment is equivalent in terms of what it does to people's sort of happiness and well-being as a cancer diagnosis.
Huh.
It is one of the worst things you can do to someone.
Right.
That doesn't mean that a manager should never lay off people, right? Like sometimes sometimes you have to do that for the company to survive, but it should never be a casual decision. It should never be something you don't lose people.
And it certainly shouldn't be something that the manager gets enjoyment from, which is something that you also point out. Gautam, I'm so sorry, we have to leave it there, but people can check out your Forbes column for your full discussion of psychopathic traits and how some CEOs can potentially have them. I really appreciate your time this morning. Really fascinating discussion with Gautam Mukunda. You have been listening to Yahoo Finance's Opening Bid. I'm Julie Hyman. Thanks for listening.
On the hunt for the hottest market commentary? Then join me, Yahoo Finance's executive editor Brian Sozzi, on Opening Bid, a show with unrivaled insights from top money managers and analysts. New episodes of Opening Bid every Monday, Wednesday, and Friday starting at 8 a.m.